Good morning and welcome to Equity Story, the 8th of March, Wednesday, middle of the week. And as per usual, I'm here with Claude. We're going to talk about fundamentals. So hopefully we're going to come up with some interesting stories for you today, as we've got our thought of the week this week. And we're looking at, the theme is today, Claude, that we're looking at a story that caught our eye during the reporting season that we haven't really talked about, right? Something new. Something that potentially we could start investing over the coming weeks, months. So I've got a story, you've got a story to tell. So we're going to wait for that. Before we do that, I'm going to quickly just throw you to that Equity Story disclaimer where we talk about certainly just fundamentals and technical. So nothing personal in there whatsoever. It's just general advice. And again, just before I start getting onto those actually announcements, and there's maybe about 4 or 5 I need to quickly run through. I want to just quickly talk about what happened last night in the US, because there was a bit of a sell-off, right? Let's call it a small sell-off in the US on the back of Mr. Powell, or Dr. Powell, talking about how potentially the numbers now in America, that's the numbers that look at for the slowdown or the acceleration of economy, it's starting to go the other way that they want, which means his speech last night spooked the markets, saying that potentially they can go faster and harder again on the interest rates, because they want obviously rein in this inflation. So it was looking good, and then a couple of numbers he didn't like, and that's the commentary that was coming out last night out of him. This morning, so that obviously spooked the market. That sort of threw everything out last night, and that's going to affect our market today. But this morning we had Dr. Lowe come on and talk about his RBA decision and talking about where we are standing with interest rate rises, right? So it's really now very different to what the US is saying. So he's pretty much, what we saw yesterday was another rate rise, right? But he's saying that there might be a pause coming very shortly. So I think the economists and the predictions are that it's going to be one more rise before there is a bit of a pause to see how these effects are taking shape with all these rate rises over the last 11 in a row. But of course, he's also emphasized that it's going to be depending on the numbers coming out, of course. So, it's pause, yes, but if the numbers are strong, then maybe there won't be a pause. But he is tending towards a pause because the numbers he saw in February were better than he expected. And that's better when it's weaker, which is good for us, because we want to see that inflation being tamed, and we want to see that rate rises not to rise too far. Saying that personally, Claude, and I'm sure you're probably thinking about the same, because we spoke about this before, we're probably thinking that we need to go higher because we need to rein in this inflation. And I think the general feel is, and I think they're also saying that the inflation is going to persist much longer than anyone anticipated, much higher than anyone anticipated. So we're going to be in a high inflationary, high interest rate environment for some time. So we've had that 11 years of ridiculous zero rates. We might have, a ridiculous period of time where we might be, say, 5% interest rates or higher for an extended period of time, where everyone's going to have to get used to it, really. So it's just going to be quite interesting from that point of view.
Yeah, look, that's my feeling, is that sure, inflation might have peaked, but that doesn't mean that it's going to come back down immediately. So I feel like there's still a lot of people that think it's going to come down. I think probably consensus is it comes down pretty quickly, and I struggle to believe it. Like I feel like it's quite embedded now. There's definitely especially in Australia, I think it's definitely embedded. You've got a Labor government who are extraordinarily dedicated to improving the minimum wage. They're extraordinarily dedicated to empowering unions. Now, you can think whatever you like about that in terms of how it fits for society. And it's not always, all positives or all negatives. But yeah, the point of the matter is this to me is inflationary.
I agree. So it's going to be a really long and winding, slow road, pretty much, to get everything down where they want it. And I think, yeah, we just got to navigate through it, and hopefully the markets will settle down eventually, accept the fact that we are going to be in this, and still, somehow find those stories that still work in this environment. Pretty much, that's what we're going to do.
I reckon probably the next low rate regime, like if I had to guess, it's going to be like after the property market crashes and the economy slows down, and then they'll ramp it again in terms of, that's when inflation will really come down, is when people suddenly are actually worried. At the moment, if everyone thinks, oh, inflation's peak, it's coming down, then, doesn't really change your behavior that much.
No, that's right. But, thinking also what we've seen previously over the last 11 years, I don't think we'll ever see that again at zero interest rates anytime in my lifetime, probably, because I think we've learned our lessons. I think we'll have problems afterwards, big ones, if anything does happen that could spike the inflation again. So yeah, look, interesting. Anyway, look, it's always fascinating for me, Claude, that I've been doing for such a long time, and it's always a very different day every single day. So that's why it's so exciting to do this bloody work, because it's just every day brings new interesting challenges. All right, let's talk stocks. So first of all, I'm going to go through some announcements this morning. If you want to jump in at any of these stocks, please do so. But there is a theme here happening with CEOs departing suddenly. So we had MP1 yesterday. So quickly, I'll just refresh everyone's memory. MP1 yesterday, the CEO quit. So Bevan Slattery quickly jump on board and say, we're going to take over. But look at the chart, it looks absolutely terrible. So this is a sell technically. And after we spoke about that on our video yesterday, ALQ came up with this very similar announcement. Another bigger story, their CEO quit suddenly as well, effective immediately. So look at that reaction. Again, not very good. You lose your CEO, down you go, baby.
And I think it's worth talking about like the fact that, knowledgeable insiders like CEOs in a cyclical company, they know when it's turning. So it's if you've been there for a while and you've got enough independent wealth that you're not worried about things, it's probably better for your career and your life if you just be like, all right, I'm going to quit while things are still good and, go and do something pleasant and come back, in some professional role a bit later in some other company. And then you get your name well separated from any blow up.
Yeah, look, you make an absolutely valid point. Absolutely. They would know when is a good time to quit, right? And whatever excuse they make, right, it probably doesn't matter. It's still a negative, and it possibly points a picture that it's time to look at you maybe lessening your position in some of these stories that you're in. All right, next one. So I want to quickly mention EUR because they've come out. This is a little lithium play in Europe. And they've come up with a DFS, which I had a quick look at. And look, whether it's going to be developed or not is probably going to be the biggest question. And for me, no, because it's going to be over $1 billion to develop, right? That was the takeaway from there. But you just never know. One for the traders out there. Obviously, it's not trending at the moment, but at least they're progressing. And I think that's probably as far they can take it before they have to take the next step. And that is getting all the permissions to mine, and then obviously getting the funding and so on. That's going to be the tough points now. So they've probably done enough work as possible. So where to from here is going to be the next question. So for me, I'm not going to touch this. Just too hard. I think it's in Europe where it's going to be very difficult for them to gain any traction. Okay, next one, car sales. And this is one we hold in our portfolio. So I want to mention this one because they are buying an extra, 40% of Webmotors they don't have, which values, I think, Webmotors are off roughly about $900 million. They're paying a fairly full price, which I had a look at, which means that they're talking about it's going to be EPS neutral and this year and accretive next year. But it's good that they're buying something that's actually been working for them fairly well. I think the growth over the last few years since they first got in was about 20% odd per annum, which is nice. So the capital raising will be about $19.95, they said, which is a fairly hefty discount, right? You got to say. But I think overall good move for car sales, where they're going to have now 70%, 30% Banco Santander are going to own the stuff. It's the 5th biggest market globally for cars in the world, right? So it's definitely a good market to be in. So I like that point of view. I think trading on 30 times is not cheap. It's not, traditionally not super expensive for car sales, but it's maybe I'll give you opportunity now at $19 if we get about $20 again to get back into this story if you haven't gone so already. Next one, SYA. I want to mention another lithium story because these guys have just gone commercial. So I think they sold the first shipment of this lithium. And look, any move to commercialization is a big move for any company. And can they sort of make money out of this now is going to be the next question. So it's still holding trend. It's one of the few ones on the lithium space that is holding trend. So you got to respect that and just watch it to see how it behaves over the next following few weeks and months. Because like I said, we need to see the numbers now coming out of the financial numbers coming out of this to see if they can be profitable on this mining. So play the charts. I think under probably 21, I'd be probably selling. So just be careful with it because the lithium price is still going down. And last one I want to mention is VNT, which has been owned by private equity, refloated. Private equity is getting out. And today's announcement that the big two boys are selling down further the shares, which is going to put pretty brakes on the actual share price gain. So unfortunately, that's what happens. Once you get listed by private equity, they probably have a big stake, and they're gonna get out within the next year or two when the escrow expires, right? So that's what happens with these stories. Not for me. I'm not a big fan of Ventia, but anyway, it's one of the bigger stories, I suppose.
Fair.
All right, Claude, this is the exciting bit. Of course, we know everyone wants to listen to our thought of the week. So here we go. I'll let you go first this end because I just need a drink.
Sure.
So the thought of the week is obviously we've had that conclusion to the reporting season. Is there anything new that caught your eye that you're starting to go, oh, I might be interested over the next few weeks to do further research and buy some?
Yeah, for sure. So one of the ones, obviously, like it's been a painful time for the growth stocks, but obviously one sector that at least for now is still going well is that sort of cyclical services kind of stocks. So the one I wanted to talk to you about, which I think is probably a decent company long term and also probably decently positioned in the short term, is SRG Global. And the first thing you got to know about SRG Global is that they had a solid set of results. So up on every metric, about 30% pretty much. And in there, they have a longer term track record of growing by acquisition. Now, of course, when you have a company that's growing by acquisition, these guys are benefiting from, CapEx, both mining and non-mining, and spinning off a bunch of cash. They got net cash. They've been increasing the dividends, but couldn't resist the temptation to actually make quite a large acquisition there. So even before this acquisition of ALS Asset Care, they did, forecast for strong EBITDA guidance, and that's positive. It just shows that their business is going well. And then they've also decided to issue a bunch of shares at 72 cents per share, which is slightly below the current share price, in order to buy the asset care business from ALQ, which I think we just mentioned as well, ALS Limited. So that's the transaction there. Someone's going to win, someone's going to lose out of that. Generally speaking, these big transactions can be a risky moment. So I think that that's something you just want to flag, that it's a risk there. But having said that, I also think that this, capital raising and then the institutional supply at 72 cents per share probably create a little bit of a handbrake on the share price there for now. And I wouldn't be overly surprised if this stock gets, all it needs to do is like have this acquisition not blow up in the first year or whatever. And I think that the momentum should be pretty decent, since that should provide some acquisition growth. And so from memory, it should be EPS accretive as well. It is in fact EPS accretive. And so, and it's supposedly, it's a capital light business model. Also supposedly, It's maintenance related. So that's the real key, is like, if I want to play in this cyclical space, I want to be able to hopefully see, the companies that are more susceptible just to the pure CapEx spend and the drilling. So if we see the drillers start to tank, if we see something like little XRF start to tank, or at least, its results start to go down whilst SRG is still strong, then maybe that's a warning that the good times might be over for SRG, but we'll probably be seeing that across the whole sector. It's going to come down as well, but I'm hoping its actual results would hold up okay. And so that first set of results where these things start to roll over, maybe this one does okay, and then you can probably get out at a decent price because it's got a lot of maintenance based revenue there. But yeah, low margin business, so any little hiccup on demand can easily send profit tumbling. But yeah, also increasing scale there. And then if things go well, you do have sufficient upside because the PE ratio is not too high, about 16, 17 at the moment. On top of that, we should get a little bit of EPS accretion from the acquisition. So that PE ratio goes down, assuming they perform as expected. And then, what you're left with is now it's a $400 million company, right, as we speak. There's going to be more share issuance and it gets bigger and bigger. Like maybe you could see in the best case scenario in a few years, this is a much bigger company that even gets into indexes. Not saying that's going to happen, still a long way to go, but the performance over the last 3 years has been good. And quite frankly, I think this is one I should have been looking at before results. But here we are, they've done good results. The share price is not that much different from what it was before results because of this acquisition. So actually, in fact, the share price is a little bit below where it was before at results.
So is this an opportunity then? Is it an opportunity maybe?
That's how I feel, basically. Like I haven't, got there myself. I kind of wanted to see, what do you think of the chart, for example?
I think the chart, I'll put it in a moment for everyone as well.
Yeah.
But you've got that little table of the numbers that you spoke about, right? And like you said, 30% pretty much across the board. That is very impressive. So, from if you're trading on 16 times, growing by 30%, I think that's very, very good. So,
yeah, and the acquired business is slated to improve their margin as well. Of course, in that first half, you can get a lot of acquisition costs and stuff. So there's room for disappointment there, of course. It's always a risky moment with acquisitions. So not without its risks, but if you sort of said to me, Claude, you got to buy a new company you haven't talked about before, you got to buy it now. This is the best one that I'd choose right now. Of course, I'm not buying it yet, but this one to me looks all right.
Thank you. And I like it. I like it a lot, actually, because I love the numbers. I also like this little thing here saying FY23 EBITDA guidance increased. I love when companies give you a little bit more incentive to go, oh, we're going quite well. I'm going to give you a little bit more and see how, if you're going to like us. So all this, I think, points to a pretty good.
I actually looked at this, a while ago when I was starting. I didn't go hard enough into the old mining services. Like, I think, as we know, like I dabbled here and there. I bought a few of them, but like in hindsight, I should have really thoroughly gone through the entire sector and found the ones that I liked. And I think I would have come across this one if I had.
Yeah, no, look, you'll learn.
It's just always hard when you're like, oh my gosh, I'm going to change my portfolio drastically from this way to the other way. It's like, well, you don't want to change things too quickly because then you don't get that long-term run that I got, which was life-changing for me. So there's lots of good winners during the life-changing run. But now it's a different regime. Interest rates up, probably gonna be like looking at a different kind of winner for the next couple of years anyway. And then of course I'm hoping, at the end of the day, healthcare tech, that's going to go well over the course of one's lifetime. But that doesn't mean every little 5-year segment, that's the sector that you want to be in.
Yeah, I mean, look at the charts, because I put this on a 5-year chart. So you've got the cyclicality, like you're saying, right? Up to 2020 down, from 2020 early up.
And that's why we don't talk about these as the long-term.
Yes.
As the long-term compounders, right? Because they're not long-term compounders, that they don't perform that well over the long term. But if you get the run, they're still good.
Yeah, absolutely. You can make some really good money. I mean, they could double, triple in a very short space of time because they can improve the margin slightly because they're low margin, and you're getting you can have a margin expansion very quickly, right? Just out of that. So yeah, look, I can see it, and we got to get something. We got to still dabble in these sort of stories. I think that's for me, the story that comes out of our investing anyway, that we should not just forget about these stories, the cyclical stories. There's money to be made. And you can see, if you got onto these early, right, when you could see that sector is having a good run, you could have doubled your money already in just a year and a half. So, this is good. This is good returns. So we can't forget about these stories. Anyway, I've got a very similar story, Claude. So I like this. I mean, the chart is good. Like you said, I think if they perform another 6 to 12 months pretty well, right, I think this is a good buying opportunity around the 72 cents. So, chart wise, hopefully it will turn once that capital raising goes through over, the next month or so. And maybe the market settles down a bit. We might see that sort of get back to 72 and start going back to 80 cents again. So potentially an opportunity. Just be patient with it. Just wait till the week of the first one and see how it goes. Alrighty. So my idea was a company called Silk Logistics, which I came across actually for the first time, I think, during the reporting season. So the actual chart is not fantastic. It's only been listed for about a year and a half, I think. So it listed at $2, went up to as high as $2.65, I think, and sort of been going between $2 and $2.50. So at the moment, you're probably the original IPO people have up 20%. So for me, look, I'm glad that I've seen that first 12 months operationally wise. So it's settled down. Now is probably time to have a look at this. So I have been looking at this. So the story goes like this. So this is a logistics company, and I'll show you the actual numbers and its story itself. I like from the fact is it ticks a lot of boxes for me. So first of all, it's inexpensive. It's trading on about 11 times FY23 earnings. So that's a, first of all, big tick, right? Value wise, I'm happy with that. Growth wise, you're looking at about, I think, midpoint. I've taken it, and this is on the back of the guidance, was about 15%. They're very conservative, and I had a look at the numbers for the last 3 years. So they're fairly conservative, and they usually tend to outdo themselves, and they're quite happy with how they're going at the moment. And I'll talk about it in a sec. So I'll show you the numbers they're talking about here. Right, I'm going to go straight to the bottom. So there's the revenue numbers. So they're talking about underlying EBIT of about 13 to 90%. So I've taken that middle line of about 15%. I'm fairly happy with that. So that translates on an EPS basis of about 20 cents on the basic premise, not underlying. I've taken the basics on about 20 cents, which puts it about 12 times, I think, 11 times, 12 times FY23. That's inexpensive on a 15% growth. I really like that. Also 5% yield too. All right, so what do those guys do? 3 things. They've got 3 business units. One is port logistics. Second of all is warehousing, and third for is distribution. That's the smallest one. That's the one they want to grow harder and faster over the coming periods. Distribution bit. So we'll see how that goes. Now, interesting enough, with this company, 60% organic growth, 40% growth through acquisitions. They're talking about a latest presentation, looking at a big acquisition over $100 million, right? Which is quite interesting. So that's a substantial, considering they've got 500 million revenues slated for FY23. That's about a fifth of their size acquisition coming up. So possibly a capital raising as well. So watch for that. Balance sheet, we looked at that this morning. So we're looking at 34 million in cash, 6.3 borrowings, short-term, longer-term borrowings, 21.4. So still a positive cash position there, which is good. Also, they've got a recurring revenue with some of their clients as well. So that's also quite interesting. I think they got average relationship, they're talking about 8.3 years, which is nice. What else can I tell you about this? So all in all, look, Australia-wide company, looking to obviously grow through organic and acquisitions. I like it. I like the way they operate. They're highly experienced guys, also ex-Toll. So pretty much this particular sector. So they breathe this pretty much like they know what they're doing. And they've been delivering over time, which is for me very, very important. So I've got that, behind me where I can see what they've done previously, and I'm happy with that. So overall, pretty good. The other thing I just wanted to mention, so somebody asked them on the latest podcast that they've talked about, Claude, that so how's your January gone? And they've said they've actually stronger than we anticipated, right? Because they did flag that there's some probably easing coming through, so they're expecting a little bit tougher conditions coming through for sure. So they're not beating around the bush that things are looking rosy, but they've generally surprised them. That was quite strong. So let's hope there's a continuation of that, and maybe there's a little bit of a surprise result at the end of the year. So I like this company. I think this is fairly well positioned. Silk Logistics, cheap, good dividends, growing at 15%, hopefully moving more if we can get at the upper end, maybe closer to 20%. I think this one, we're going to start adding to the portfolio, the fund portfolio. So if you guys like it, and like I said, chart-wise, nothing happening there for the moment. But I think with time now, with having that 18 months on trading on ASX, we're going to start seeing that going up and maybe start a bit of a re-rate as well. Because I think 11 times is a bit too cheap for me. I think it's going to be a little bit more expensive. And I think a couple of brokers who floated them in the first place, they've got their price targets at about $2 plus. So, probably they have to, because they probably supported them. But anyway, they're quite bullish on the story themselves. All right, so that's for me. We got a couple of really interesting stories, SRG, SLH. We're going to keep following them now from now on, see where they're at, see where if we can buy them on a chart as I trade. Longer term, definitely, I'm liking both SRG and SLH. So thank you very much, Claude, for your idea. And thank you very much for joining me again on Wednesday. I always love talking stocks like this with less technicals, because they can get too much for me. So thank you very much for that. Have a great day, everyone. And again, we'll see you again tomorrow. Cheers. Thanks, Claude.
And thanks, Peter. I liked your idea of Silk Logistics as well. We're thinking along those same lines. I feel like that's got decent long-term plus probably short-term fairly favorable as well. So I'm with you on that one.
Thank you very much. Well, I'm glad we're not like it.
We've got to find some of you. The problem is when we disagree, then you're going to be right. So I'll happy to agree.
No, we're good. We're good. All right. Thanks very much.
See ya.
Bye.
Bye.